Good afternoon and welcome to Biztech's Asian Midday Market Watch. Leung, founder and CIO of Track Record Asia, is our guest today. Welcome to the show, V.
Hey, thanks. Good to be
Now,
here.
we'll start by taking a look at crypto markets first. Bitcoin is at 39,162.2. It's up 0.96%. Ethereum is at 2,619.05. It's up 2.91%. Now, if we look at regional stock markets, we've got the SGX, which is at 3,276.98. It's up 1.27%. Across the region, we've got the KLSC, which is at 1,560.18. It's up 0.18%. Shanghai is at 3,078.13. It's up 0.45%. The ASX All Ordinaries is at 7,428.7. It's up 0.99%. The Nikkei is at 25,730.5. It's up 1.55%. The Hang Seng is up sharply. It's at 18,914. It's up 2.71%. And rounding up the numbers, we've got the Kospi, which is at 2,644.61. It's up 0.88%. Now, V, we've got a sea of green today compared to
Yes.
very rough trading in the last few days. Tell us why.
Well, we are seeing a recovery today because U.S. stocks did well yesterday after the bloody session in Asia with Hang Seng leading and Shanghai leading the way down because of COVID fears, fears of delisting of Chinese stocks being delisted from the U.S. And war risk, of course, the war. And last night we had a few good developments. Oil prices came off the highs. Of course, some people think that maybe that's a sign that there could be a deal imminently between the Russians and the Ukrainians. But the move down in oil is like 2 days ago. It was caused on Monday. It was caused by the renewed lockdowns in China, possible demand destruction. But the good news yesterday was the producer price index, a measure of inflation, the US PPI, for the first time in months that I can remember, it undershot expectations. So in layman terms, as you say, it's good when inflation data is undershooting expectations, is because we had months of inflation data showing that inflation is much stronger than most people predict, even after revising expectations higher. Given that inflation is high, it's normally it's become a normal occurrence to see it high or higher than expected. So it being lower than expected is good for investor sentiment because it may give Fed reason to pause in if they are thinking to become very aggressive in their comments later today in their policy meeting. So because of that, I think that eased the market fears a bit that the Fed may start to talk very aggressively. The market is priced for 7 rate hikes this year, which I think is a lot. It's a lot. So it's important to see what the Fed's projections are, the so-called dot plots. They're going to release it. They release it every quarter. So there's going to be one this meeting. So that's significant. But the other thing is, I think many investors have capitulated. They have those who are invested probably has hedged their downside or even got out completely. And there were rumors of hedge funds going down as well because of the extreme volatility. Unfortunately, it's to the downside. Usually, it's to the downside. It's not good for markets, right? So we have all these issues, but I think for now it's a relief rally, more like it's a good news that news wasn't as bad as predicted. But key is to the Federal Reserve meeting later today.
That has a 25 basis point rise already telegraphed and widely expected, correct?
Yes.
Now,
And
sorry, go ahead.
there's a small risk, a very small risk of a 50 basis points hike, but this is very unlikely given, as you said, it's well telegraphed by the Fed chair, Powell, in his latest testimony before the Congress that he's going to propose a 25, and the voting members on the committee, there's very few who has come out to say that they want a 50, right? So I think we should be seeing a 25.
V, I want to zoom in on something which is a little bit under the radar, but I think it's going to probably become more prominent in the next few days. Now, the Russian state is due to pay 170 million in interest on two sovereign euro bonds today. Now, there is a prospect that Russia starts to default on its debt. How will that default impact global markets?
I think that's it's going to be quite a technical development whether they're in default or not in default. I think it is not about whether the Russians want to pay or not. It's just more of that they cannot pay with the dollars, right? Because there's the ban on the SWIFT that is in progress, and if they have any that is outside of this, it's very unlikely for them to be able to pay in dollars. They have stated that they want to pay in rubles, but of course the rating agencies. One of the rating agencies have said that if they pay in rubles, they will consider a default anyway. So, but I think if you're a credit trader, you would have been uh, uh, anticipating this since the start of the war. So it cannot be a surprise to you if you're a specialist in credit, right? That
Mhm.
this payment may not come true. But given that the markets are priced for risk of a prolonged war, not really a prolonged war, but the bad scenarios of the war, I don't think it's going to have that much of a shock on sentiment. But we cannot underestimate the possible domino effect, right? A lot of people thought when Lehman went down, it's not going to be a big deal, but of course, it had cascading of effects throughout the financial system. When one person defaults, what happens to the other non people who are expecting payments, and then they cannot make their payments because the other guy defaults, right? So we should always be cognizant of that domino risk, and it is a problem that needs to be addressed somehow. And if I'm sure, because it's not a sudden occurrence, I'm sure central bankers have also considered this, and they are probably ready to stop any contagion effects.
V, thank you very much for taking your time to be on the show.
Thank you. Cheers.
Now, we've been speaking to Phan Leung, founder and CIO of Track Record Asia, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.